Hey guys, welcome to repeated stream. Welcome to the Trading and Analysis Crypto Lab with Alex. We are repeating this stream, which was supposed to be on hour or two ago. We had some technical problems. I think now everything is solved. We had some technical issues with the OBS again. So can you just please leave me the message in the chat that the voice and streaming is okay now, so I can start the presentation. Uh, can somebody just type in that everything is fine with the stream? You hear my voice and you see my screen? Yeah, okay, great. Yeah, I'm gonna repeat the whole stream. I apologize for that. We have found some of the conflicting files between, or I think it was encoding errors. So now the stream should be good. So we shouldn't experience any disturbance. So as usual, we are going to go over the macro scene. If you didn't look the stream 1 or 2 hours ago, I'm going to go over the whole thing, and then we're going to switch to cryptos. And if you want me to see some cryptos and discuss anything of that matter, you can leave your request in the chat box, or you can leave any other requests at all if you like. So let's start. I'm gonna enlarge the screen and start with the latest, of course, events which we have in the inflation themes and geopolitical events didn't change, they actually escalate. We have higher and higher inflation readings. Of course, with such energy prices higher and geopolitical heightened risk in Europe in regards of Russia-Ukraine war, things are getting even more heightened up. So the first event we have in front of us is the 4th of May, which will be the next Fed meeting. Of course, Jerome Powell announced the 50 basis points most likely move up in interest rates. So as you can see, 96.5% on this CME Fed tool is already pricing a 50 basis point move. We have seen the move in the stock markets as well in reaction to that. But what is interesting is 15th of June, which is already starting to price in 86.2%, even another 50 basis points move. I don't think maybe this will fluctuate, because that will all depend what the Jerome Powell will actually say in regards of the Fed's view in the prospect of inflation. This might vary, but it is interesting that market is already starting to price in even for the next meeting in 1 month after the 4th of May, so 15th of June, another relatively big increase. So if this happens, Fed will be in the range from 1.5 to 1.75 with the rates. There is also, we tracked on the 10-year yields. So the chart is not changed much from the past stream, I think last week. So this is the kind of 40-year chart. And technically, because I think fundamentally the picture is a little bit more blurred. We are experiencing inflation going up. We have additional lockdowns in China. We also have energy prices in consolidation. I think we should look this a little bit more from technical perspective, because there is a lot of cross currents going on. So in that respect, we have abandoned, of course, when we have seen this break of our last resort resistance levels here on rates to eventually drop lower, but with such a high inflation reading, of course, that didn't happen. We continue to move on the upside. A couple of weeks back, we changed our outlook on a more bullish one, looking these developments from the COVID start. So if you look this longer term chart, we are definitely now in the territory of the previous correction, which usually is depicted as a resistance. And I have seen also some of these things repeating in some other charts, which I will show you. So I do expect potentially after this rate hike move from Fed, these rates to ease off, not much, but just maybe consolidate a little bit. You have seen the readings here on chart. You have seen the readings, or you are seeing the readings here on the upside, RSI almost 70 level here during this historic move lower. Every time we reached 68, we actually dropped. And now we are trading on the RSI around 74.93, and this is a monthly chart. It might take time, but I think eventually in this range, potentially even up to 3.5 or 3.2, we might see some type of a pullback and a consolidation. And then we will have to check the circumstances, what's going on globally, to see if this will continue further on the upside. So I will be more for a little bit of pause technically in this consolidation, looking all of these features. And I do see that potential a small relief for a couple of months in front. So I will show you that. So on 10-year yields, I do see a little bit more upside, up to 3.5, 3.2, and then a small, at least small rest. Maybe we're going to get some move lower or a consolidation, and then we will go from there. In Germany or in a European side, this is the 10-year Bund price, so it's inverted on yields. We are still trading around 155. My support levels, first support levels has been broken down, so I have this consolidation as a support zone. The RSI on this monthly level is also very low, around 20. It is almost only here we had, I think, a bigger reading, so potentially we might also see some pullback here, but this still doesn't depict any of the impulsive nature. So we have to track what is going to happen here, but especially in the European Union, the high debts of peripheral countries and countries overall, I don't think that ECB might be on the path of increasing rates much on the upside, maybe 2 or 3 hikes. Anyhow, we have to wait here to see if this unfolds in a 5-wave manner. Then we will have to rethink this view that the rates will find some type of support, and then we're going to continue in deflationary manner. So I still see a 3-way move, so I'm not going to change this because of the relatively impulsive move on the downside. I need to see 5-wave down to completely change the outlook. So for now, on this higher time frame, I'm not prepared to do that. I usually wait for signs, so I'm still gonna pursue the potential deflationary scenario in a couple of months. Okay, so let me go and see dollar index. So this is the almost from 1968 chart. Dollar index has definitely broken all possible levels for a smaller consolidation. We are trading above the previous high, COVID high in 2020, so we have to start to look this more impulsively and actually structure this as a 5-way move. As you can see on this chart technically, the resistance comes around between 110 and 114. So if we look the wave structure, we can depict this as a 1-2 up in 3. This we can place as an ABC correction, and this we can look impulsively on the upside. If we go on a smaller time frame, we will see that this expansion starts to get a little bit more of a wave 3 of 3 characteristics here, which of course will be something which might develop further on the upside. We are trading at 103.68. We might get a little bit of pause in that respect in general. So we might get a little bit more upside, some pullback in a wave 4 and a wave 5 on the upside, which actually will bring this cycle to the end. Although 108 to 110 or even 14, it's pretty high level for dollars. As you can see on this chart, this will cause a lot of trouble because in general, the EEM countries or even the euro-dollar offshore markets are pricing on the option side that the rates that are planned by the Fed will not actually come true. And option markets are moving in that direction. So that will actually ease off on the dollar side, but let's wait a little bit and see how this will go. So looking just from the Elliott wave perspective, we of course has to take into the consideration that this starts to look more and more impulsive, and actually we have to turn a little bit more bullish on the upside, at least on a short term, until we see is this first target 0.38 will be the reversal level. I don't think so. This starts to look a little bit more impulsively, and if this starts to be a little bit more on the upside, definitely above these levels, that will mean that DXY in the next couple of months can even reach even higher targets in this five-way structure. So in regards of oil and commodities, we are living in the world where the dollar and commodities are going in tandem on the upside, of course, because of many things. Interest rate differential, because the Fed is most aggressive in the world in moving rates. We all witnessed what is going on with the dollar yen, because the Japanese central bank actually capped and it is doing a yield curve control at 0.25, and that is moving yen to weaken substantially. I'm going to show you that chart just a touch later. Oil is still consolidating, as you can see. Even a couple of weeks ago, my kind of a wave count, which was showing, and this was before the war happened, around 140, was pretty much alone in that opinion. I didn't do anything especially. I just changed potential this A, B, C in a flat and then move lower. But then we got into the war, and now it is not very wise, of course, to look for the oil to go substantially lower. So I will stay bullish looking the current consolidation, potentially in some triangle, and as long as we trade in this range, I will be looking for oil to go higher. As you can see, the previous correction consolidation here is now starting to mimic the same path. So we might see a little bit more of consolidation, a small breakup, and then maybe a small reversal, but I expect oil to continue to consolidate until this level further before we see some breakup even to higher levels in oil. As long as this 93 to 90 level, as you can see, this previous consolidation holds, this is definitely some type of a support level for now, because we are seeing the price consolidating, and that is always kind of increases the probability that the price will continue in the previous trend further on the upside. On the other commodities front, the soybean is still moving on the upside. We are still looking for a little bit more upside in this commodity. Also, we're going to show you, and we had requests for the Henry Hub natural gas chart. So I still see prices going up in natural gas. This was a pretty sizable consolidation. We cannot place any impulsive movement here. ABC x ABC, potentially a complex correction, but from the lows here, if we go on a daily chart, we will see that an impulsive wave structure is actually developing. So in that case, we can count this as a leading diagonal, because we have an overlap here in a 1-2, and then we have a 1, 2, 3, 4, and 5. We are still in a wave 3 of 3 in this intermediary development. So wave 3 of 3 actually was over. We are in the 5th wave of the 3rd wave. I do have a target around 9.17. So we are still not there. I'm looking for a small consolidation, move up, and then potentially a larger consolidation before we continue towards 12, 13, and even a little bit more higher on net gas. So for now, I do see this wave structure developing further on the upside. First, this common uh, target for the wave 3, 1618 projection, which comes around 9.786, a small pullback or even a triangle, and then a continuation up to, let's say, 12, 13, or even a little bit above, at least in this cycle, in the net gas price. So let's look at the CRB index, which is a Reuters commodity index, Thomson Reuters commodity index. So still the same situation. So we are looking for a 5-wave sequence. We didn't see a move down impulsive from this target. So most likely we're going to go to the upper one, which will actually mark the end of this first leg, which you can see here in soybean. Also, you can see that in corn. And a couple of other charts. So that's kind of agrees maybe potentially with a small movement down in yields. If we overlay the 10-year yields with this chart, so let me show you that. I think I have shown this before. You will see that they're kind of correlated from these lows. There has not been such a big correlation in past. In some of the times, actually the CRB index was going higher, yields were going lower. You have now and there a correlation established, and actually here also worked well to this low, but now, which is kind of almost a natural thing, yields are behaving, moving up with commodities, which is a kind of a overall theme. Looking at the both wave counts, we do expect a little bit of pause, and we can also see that in some of the charts in corn, soybean, also potentially here on the net gas and other commodity spectrum. So I kind of think that this correlates, and all of these charts are telling us that we might see a little bit of this pause in this inflationary run-up, as well as maybe some type of a correction in DXY in the starting soon in the next couple of weeks. So the general theme, just to kind of have a small conclusion on this macro stuff, yields potentially still continuing higher. Fed starts to actually hike 50 basis points. They already started to hike, but next hike with 50 basis points, it will be interesting to see what Jerome Powell will say on the next moves. Maybe they're gonna put a little bit ball on a lower ground, not hike 50 basis points in June. We will see that. That will be also a very important meeting. But looking all of these charts technically, I think we are potentially going to see a little bit of a leeway or a pause in this inflationary run on the upside. How long this pause will last, we will see. And of course, we will track this on this Crypto Lab streams. So switching to cryptos, not much of a news in cryptos. As you know, cryptos are pretty much still in some type of a consolidation. We are looking the total crypto market cap, and there is a wave 1 and 2 up in 3, 4, and 5. We are still looking this unfolding into this potential triangle consolidation. We are not breaking this key 23.6 levels. We are trading at 1.77 trillion. We are not going to change still this wave count for now. Of course, if we look for some correlation, and that has been my subject, Bitcoin has not followed through so drastically this dollar move on the upside. So I have been debating this dollar Bitcoin correlation, and I think this correlation is working, depends on the conditions. Actually here the correlations start really to work, but before it was around 0.6 or even below, which is not considered to be very consistent. So we can see that also either Bitcoin lags a lot and doesn't follow through, or my observation is actually right, and we have this disconnect and connect with the dollar Bitcoin teams now and then, establishing and then breaking up. So I'm more fond of this type of looking dollar and Bitcoin together. So if we overlay this total crypto market cap with semiconductors, uh, which our founder Todd Gordon has very nicely explained. You have that his video stream from his new wealth management business on my Twitter if you want to look at it. So if we overlay this, of course you will see that the most consistent correlation, and you can see this here with the Bitcoin or a total crypto market cap, it's almost working perfectly with this SMH ETF. And of course, as you can see, the SMH ETF dropped down, and cryptos are still not following. So this also might occur on the downside, so be careful. Actually, as we are seeing situation now, with the stocks moving lower, cryptos are holding pretty much nicely, is still in this sideways consolidation, which does not mean we're not going to break on the downside, but for now we don't see that. Okay, I just wanted to point it out. If you actually follow any correlation, most likely this will be the one you want to look at. And we are still not going to change, of course, this triangulation until we see some of the key level actually give away. And for now, we are not seeing that. So, but I'm a little bit cautious looking all of these conditions. And of course, the Fed will be a very very important meeting. So let's move on the charts, and let's look the overall Bitcoin chart. This is the larger time frame chart of the Bitcoin. As you know, we are tracking a couple of, I usually only have two scenarios. My best case scenario will be a triangulation. So some type of fourth wave completion, down in A, up in B, down in C. We finish around 34, 33K, and then we exhibit a reversal signature in 5 waves up, pullback, and then continuation on the upside. So the whole sequence actually then will have two corrective pullbacks. This will be the first one. This will be the second one. The time relation of these two is actually appealing, because we are trading now at 1618 of the time spent in a second wave. So as long as we are in this range up to 200, even to 618, which is January 2023, we consider this to be a right look guideline, under the guideline of the right look, comparing wave 2 and wave 4. So for now, I think we should anchor wave D here at this 200 moving average resistance. I think there is not much sense of still looking. I mean, this also can happen. Triangles are tricky, but I will ascribe this D wave up to 52, 56K, still in a D wave, a lesser probability. So I will go for this if I talk in a sense of a triangle, and I will show you a couple of other charts in altcoins, which kind of suggest potentially this might be the finishing touches in this triangle, and then we might see from some type of a Fed narrative or other reasons, stock markets recovering and cryptos goes with it, or we see some other things from the institutions in cryptos on the upside, some changes in the law, some crucial law changes information which will make institutions go and buy it, or inflation hedge, whatever the reason is. I don't think this rally will be actually run up by retail. Retail will be very much burdened by the current inflationary craze on the upside, and people will spend much more money on the daily necessities than buying cryptos. So I think this run and final push on the upside will actually be done by some institutional players, which will either enter the crypto market or are already there and are buying little by little, and they will increase their holdings. So the worst case scenario is the secondary scenario is that we start moving sharply lower very soon. I have talked about this many times on this weekly level. This is a very visible support level around 22 to 20K. So many things there, a base channel 38%, a couple of higher and lower time frame ratios, which gives equality here. So basically a plethora of things which are coinciding. For me, usually when you look this type of support levels, in most of the time they are not achieved because they are too visible. Market has a irony in itself to actually show you the potential support levels, but actually do a completely different thing. So that's I'm a little bit doubting because the Bitcoin was holding well. It doesn't exclude that this might happen, but as you can see on this chart, this wave 3 should be pretty damn fast and very rapid one. So I will be a little bit more careful until we are clear, until we clear this possibility and we move a little bit kind of just a small on the downside completed, and we see the movement above this channel on the upside, where I think the price moving above this 42, 43 will be a sign that we have seen a reversal signature. So I'm still juggling between these two. I don't think this is not possible. I'm just looking where the stocks are. If we start continuing lower, much sharper, maybe the Bitcoin will do a catch up. We might see a sharp drop below 30K and then just a small pop and then a final move around June, July towards this 20K, which is definitely, for me, it's going to be a very clear buying level on the upside, because I see this plethora of support levels here with most likely the RSI on this weekly level be again around this crucial moment at 31. So as you can see, this 200 moving average has held Bitcoin price from 2013-14 almost very nicely on every low. We had a little bit of breakout, but then we immediately reversed back. As you can see here, 2018 low, then we have a 2020 low, and if we get to these levels, I think this will also react as it was in the past. If we break this level at 20K, then I will be starting to be very worried what will happen with the Bitcoin price. But for now, I think even this scenario is in question, observing how the Bitcoin is holding well, so let alone breaking this level on the downside. So let's not jump the gun, let's not be spectacular and pronouncing some crazy moves. So let's go step by step and actually as we did all of this time. So let's be consistent. So in regards of that, I have been receiving some of the things in regards of our validity of our wave counts. I have received a couple of investigative questions in regards how we did in regard in looking the Bitcoin price in the past. So let me show you that just for the sake of these inquiring minds. So this is one of the presentations we usually give when we have a webinar. So this was our shorts. We didn't put a short, but we were short on the Bitcoin here down to 3K. And then, of course, you can see by the charts we posted that we are, while the media was looking for a Bitcoin to go down to 1,000, we were calling for a reversal. and a 5-wave move on the upside. This was actually our order to buy it. We missed it by 40-60 bucks. We bought it here later, and then this was the beginning of the new Bitcoin uprise. And then as we followed it, as you can see, we were pretty much on it in regards of the wave 1 and 2, which you can see now on the charts, and the targets for the wave 3 from 60 to 75, 80K. We also followed up that chart after this secondary pullback to the upside. And we were also one of the rarest research companies which announced possible correction in 2021 when everybody was bullish. And also we flagged at 2021 November that we might get a further move lower. So as regards of our credibility, I think this couple of things which we announced in the last couple of years give us a credibility to publish our work for the general public, and I think that's a kind of a nice track record that we have just for the curious investigators. So let me continue on this one. As you know, we have been consistent here for calling this consolidation from 2021. We are still is. Of course, we are patient to wait some signs, and our triangle is still in play as well. So I think we are coming very close to resolution. In a week or two, I think we will really know more precisely what will actually occur. So in regards of Ether, I will show you the same developments. Pretty much the same picture. Ether and Bitcoin has a pretty large degree of consolidation, of correlation. So same triangle, fourth wave ongoing. If we see a reversal, we're going to see a 5 waves up, above or in line with this 200 moving average, small pullback, and continuation to the upper target. In the worst case scenario, we are looking this same as a Bitcoin. So small pullback here, 5 waves down to this 200 moving average, which will be between 1,400 and 1,600, and then we proceed to the upper level. So as you can see on both charts, we do depict this as a correction. So this is the first one, this is the second one. We are just trying to figure out which form this correction will actually take its final shape. We are looking for a resolution soon. 1,618 ratio comes in June, July. For Ether, it's a little bit different than Bitcoin, but nevertheless, we are still keeping only 2 scenarios without expanding further. C wave of the D wave, I still don't think this is probable. It will be a little bit larger D wave. I don't like how this is actually structured for this. I'm not saying it's not possible, but I think it's less likely. So I'm rather gonna go with sorry, just to find I have many these working sheets where I do different counts. I will rather go with this one, which will kind of match a Bitcoin consolidation coming most likely in a couple of weeks to its end, and the reversal signature. So let me show a couple of other cryptos, and let me just get up this platform on the which we have on the other feed, and we're going to show you a couple of other cryptos that we followed through our crypto labs in the last couple of months. And so if we look also Aave, we have flagged also on our Twitter a very nice support zone on Aave. Potentially, we can make the case for Aave that this is some type going in line with the possible reversal. So I'm not saying it's going to happen. I need a little bit more evidence, but I have structured for our members a possibility that this actually might be some type of a 5-wave move on the upside. this low actually didn't go below this line, this spike on the downside. So there is some type of a five-wave movement, move down in a flat, wave 3, 4, and 5. So this might be just a big ABC, which will kind of correspond if the Bitcoin actually finds its way for a potential end of this triangle and continuation on the upside. So this will be a wave 1 and 2 a little bit earlier on altcoins, and then we might actually start to move further on the upside. Of course, key levels here will be this, and I don't mind putting a trade here with such a small stop loss if this unfolds in a 5 waves down in A, which already did, some type of triangle or move up in B, down in C. So very small stop loss. I will try this. Why not? It's not such a big risk. And if I'm stopped out, that's fine. I will always try these setups on my end when I have this type of a wave structure. So let's look a couple of others. So usually what we show, it's Binance Coin, which is still in some type of a triangulation, same consolidation as a Bitcoin and Ether, most likely, until we hold this sideways structure. We also have shown Matic for a long time still as well. We are looking this as a potential flat, 1, 2, down in 3, 4, and 5, maybe a little bit more downside, and then we look for a continuation on the upside. So also one of the interesting chart I was asked was Dogecoin. So let me look the Dogecoin chart and show you what I think in regards of that. Of course, Dogecoin become increasingly popular because of the even before, but because of the Elon Musk Twitter acquisition. So let me just throw a couple of things here. So I do think this is an impulsive chart. I do see this as a fourth wave correction. 200 moving average comes a little bit lower. I don't know if it's going to be achieved. The RSI is actually hitting this very nice lower levels, as you can see here, which was support in the previous lows, like here, like here, like here, all of the rounds, and we have a new one. In confirmation, I will see a 5 waves up towards this resistance level, small pullback, and that will be a sign Dogecoin most likely will go further on the upside. As I said, the most visible support level is at 0.084, where this previous wave 4, we have a 200 moving average on weekly, we have a base channel support, so plethora of things like in Bitcoin, but I will not, sorry, I will not object, of course, if we start even moving higher from here. If I go on a smaller time frame, we can even make the case that we are seeing potentially some type of 5 waves up in A, down in B, down in A, up in B, down in C, so a little bit more downside. Of course, the key levels will be here, where it's going to be a wave count invalidation. So if we label this as a Y wave, so don't take this, I see some people object where I put Y and X. There is a different combination, so try to focus on the content more. So if you look this chart, and it looks relatively bullish now, maybe from these levels, maybe from lower levels, overall context of this chart is that the trend is still on the upside. I don't know why people are bother themselves of dissecting either this is a W or this is just a leading diagonal in A, triangle B, down C. It's completely irrelevant when you get these fib ratios. You can make this in numerous ways. My point here is to give you overall context in the direction of a trend and the probabilities. So I don't know why people gets into dispute, but anyhow, I mean, I think you should notice the overall targets I mentioned and the overall context, and this can be subject to many discussions how these complex corrections are unfolding. So I think there is many things also pointing out this with the probability we might continue higher. Okay. So yeah, so that's it, guys. From me, let me see some of your some of your charts. Sorry, I have a little problem with my throat. Let me just bring this little bit of light. It's I have a window here, but it's come. I think it's gonna rain. Okay, so yeah, I didn't look much into this Apecoin thing. Let me look that. Yeah, it starts to move further on the upside. I had some wave count this as an ABC. I don't think this will work. This is a pretty young chart. Usually when you see something like this, you don't have such a fantastic visibility. But obviously, this starts to move further on the upside. There is a divergence. But in general, what you will do overall here, you are going to place this as a potential wave 1 and 2, and then continuing looking here for a further advancement. Let me just put these labels in the right place. This is impulsive, so I will subdivide. We don't have a degree violation here. Either this is already an impulsive move in the wave 3. I don't know. I mean, I don't have much of the chart to work with, but this looks impulsive to me, how it is currently developing, okay? Especially if you have a 1-2-1-2 without the degree violation, which means that this is shorter in distance in value than this one, and you have some type of a very aggressive impulsive price action on the upside. Although we have a divergence, we might take a little bit of pause, but this kind of smells that we are starting a bigger uprise, at least for now. So until we break these levels on the downside, I think we can structure this as a leading diagonal, small pullback, and then a continuation on the upside. So some of the validation wave counts will be around 17, and lower one will be around 13. So we are trading at 21. It's not so far, but this needs to prove a little bit more to actually prove the wave 3 of 3 existence. And then your wave 4, definitely when some pause is made, will be your possible entry if you are not in it for the wave 5. So not much of a data, but with this one I can do this. That will be my kind of a view. Always what we look as well with this type of charts, we look for equality as a measured move. So in most cases you will see that usually we go above 100%. So let me just structure this for you. Okay, let me take this again, try to drop it here, here, and here. So let's look for equality or a measured move, which comes around this level. So this will be a crucial level to break on the upside. Let me do this a little bit more precise with this cross. Will be around 2657. So in a case we are in some type of a really kind of a nice maybe 1-2 feature on the upside, we will need to actually cross this level and continue towards higher target. So that will be one of the signs what actually we do here. Situations when you have a wave 1, 2, and 3, or wave 1 and 3 equal, and then a fifth wave extended, are very rare, especially, I mean, it is usually seen in commodities. So I will not consider it that case here, at least not yet, okay? So potentially we have a little bit more upside, and then what we do here, will be of a relatively importance of if the ape is going to continue higher or not. Silica, yeah, I was already explaining. If you look at the previous crypto labs, I've been very vocal on Silica that we are in the ABC. I don't know why the people had problem with that. It was pretty visible. As you can see, this is kind of unfolding. So we have a wave 1, 3, 1, 2, up in 3, without the wave count invalidation here. As you can see, we just wave 4 dropped just a little bit close, but not invalidating the wave 1 highs, or didn't enter the wave 2 territories. From there, we have an impulsive rise in wave 1. An ABC pullback towards this channel is something which we usually look. And I already told people here that this might occur. It's not something special to know. I mean, it's pretty much kind of a visible when you see especially 5 waves down. So drilling down to a smaller time frame, you can basically just do a measured move, A up and B down in C, so a little bit more downside and then potential reversal. Okay, so not so complicated chart in that respect. Of course, you should have some reactionary to this enormous rise, and this is just a kind of reactionary function of the market. Okay. Okay, guys, so let me look one more. This is my second stream today, so I'm a little bit tired. Torchain, I think Torchain is in a nice consolidation. It might already started. This is a room, okay. I've been looking for a correction. So this is either a triangle or ABC completed. Okay, so 5 waves up potentially suggests this might be a first impulsive move on the downside, which kind of agrees with overall crypto's low soon. So in that respect, I will label this as an ABC with a support around 5.66. And then relabel this as a fourth wave. So if this is the case, this will be already the start of a new upside. Of course, this level needs to hold, okay? So this will be a 1, 2, up in 3, 4, and 5, going higher. But we need to see evidence. As you know, through my streams, I'm not any of these spectacular crypto guys. I'm always waiting for some type of confirmation. You're not going to be late anywhere. You can just be left out without your money in your trading account by pursuing this kind of a bombastic calls. So you can rather wait if you have a little bit patience and have a small stop loss and relatively nice return. Okay. Bitcoin count on the 4-hour chart. Yes, of course I can show you. Why shouldn't I show you? So depends which scenario I'm tracking. So on this scenario going lower, so this will be some type. I depicted this as an ending diagonal in a wave 1. We have seen additional move down. So this cannot be now depicted as that one, and this doesn't fit. So you can do a 335, which also doesn't match. So I have to work on this. So anyhow, whatever this is, or we might get even bigger ending diagonal here. Let me just work this out and have something like this. Let me just so actually this will be some type of of a development in some type of an ending diagonal here and then retracement. Of course, we will see that if this occurs, but anyhow, if you look even 3-hour chart, it's just consolidating around this support. So any pullbacks in 3 waves up to these levels around 42K, and then if this on these levels you see a sharp reversals, most likely Bitcoin will fly through this 30K level. Okay, it will fly through these supports and next this support, because when you have a wave 3 development, it's going to be sharp. You see, everywhere you see a wave 3, it's sharp. Okay, so in the triangle scenario, so a little bit more progressive, kind of optimistic wave count, we are again in some type of a B wave. So that's why I think most likely this B wave, I talked to my members, I will put a small shorts because both of these wave counts shows temporary downside, either in the third wave here on the downside, or in the C wave in this final E wave. So I think any correction most likely is sellable, at least short term, and then of course I will go from there. I will seek. So if you look for any orientation, I think this 200 moving average might be a good one. We have already spent a great deal of time in this consolidation, so I think we are approaching time where the resolution either on the downside towards this level that I already explained, which are visible, I think, from the other galaxy to any trader around 20 to 20K. I think everybody sees this, so it's not, doesn't take much of a brain to actually kind of pinpoint these levels. But the triangle wave count is a little bit more trickier, and also I'm used to it for the markets to surprise. I'm not going to the most obvious levels, so that's why I'm pursuing also, looking also these other cryptos for a maybe earlier reversal. Of course, I will need to confirm that. And this conservative approach saved our members lots of troubles during this last retail catastrophe. Okay, I'm going to show you Theta as well, because I think Theta is also in an impulsive fourth wave, in impulsive overall higher degree wave. Okay, so I do consider this to be a fourth wave consolidation with a little bit more downside. So all of these things are kind of telling me maybe we are approaching some very close levels. So we will see, guys. We will see. Okay, guys, so thank you coming again to the stream. I apologize for today's technical problems. Now I hope the stream went well without any problems. So see you next week, guys. Click the like button, the most hated sentence I have to pronounce. But anyhow, click the like button and subscribe and stay well. See you next week. Potentially, we might be close to some resolutions. And see you next week. If you want to check us out, of course, Trading Analysis. We have extensive crypto service. My members, I think, already grown a gray hair, but I think they're much better with the gray hair than with damaged accounts. So I think we are close, and we are going to I think start to deploy some things very soon. So see you guys next week. Bye bye.